Welcome to Westmount Wealth's Meet the Manager series, where we interview asset managers and look under the hood, asking questions that you want and need to know. Welcome to another installment of the Meet the Manager series. My name is Lorenzo Pedrozzani. I'm one of the portfolio managers at Westmount Wealth, and I'm joined by Dave Vankka, who is the portfolio manager at ICM Crescendo's Music Royalty Fund. Dave, recently we heard that half of Michael Jackson's catalog was sold to Sony for about $600 million. And this really follows up on the heels of some sales by Bruce Springsteen, Bob Dylan, and I think Sting in the last year or two. They were quite notable, $100+ million transactions. So there seems to be a fair amount of institutional interest growing in this space. So we wanted to get you in today to talk a little bit about that. At the most basic level, could you explain what is a music royalty and how do you invest in a music royalty?
Sure, thanks, Lorenzo. And you're right, there has been a lot of activity by investors, both institutional and otherwise. And I think the attractiveness and the headlines that are coming out about this is generating more interest in what everyone's doing in the space as well. Music royalties are really the payments or amounts that go to an artist or a songwriter as compensation for the works that they've created. So when somebody writes a song, they create a copyright, and then when somebody records the song, they create a second copyright. And the sound recordings are typically called masters. The writing is called compositions. And in some cases, they're the same people. In some cases, they're different. And in terms of investing in the space or how the money flows, what happens is anytime a song is played, whether it's on Spotify, whether it's at a restaurant, in a gym, on your Peloton app, on TikTok, wherever it is, the users have to license that music and pay for that music. And that's really the way the royalties flow to either the artists or to us or other catalog owners who may have acquired those from the artist along the way.
So, obviously with every asset class, there's different, things that we like about it, some features, some risks associated with it. What is it specifically about music royalties that you were interested enough with that you decided to start a fund to invest in music royalties? What are the key factors that are of interest to you?
Sure. The main driver is there's growth in the space itself. So music was an industry that was in decline until 20 years ago. And since the rise of streaming and the existence of the iPhone and Android and other mobile devices, there's been a proliferation of the model to a subscription-based model that we all know and may or may not love today. But what it does mean is you can get a lot of music for a very, very low price. And we have seen streaming continue to grow year after year. Global streaming numbers were up approximately 23% last year. And we're starting to see a lot of growth in markets outside the U.S., whether it's in larger developed markets, the Germanys, the Japans that are moving to streaming at a slower rate than the U.S., or the emerging markets around the world. And we've seen evidence of Spotify entering, over 100 countries, I believe, over the last couple of years as a result of that. So the trend is alive and well. And in addition to that, the prices are starting to go up. So Spotify increased their prices by a few dollars. So what that means is there will be additional part of that pool that goes down to the artists and the songwriters or the catalog owners. So we think that's a great trend, and we don't think consumers are going to be too concerned about cutting off their music subscription by a couple bucks here or there, given it's cheaper than a yoga class or a couple of lattes.
So, you've talked pretty positively about, a few factors there, but what are the risks? Every asset class has their risks. You've seen that you've got potentially economic downturns. Music seems like a discretionary item, obviously, just like going to the movies or whatnot. How do this rising interest rates, and other risks that we see in the marketplace affect the collection of royalties as an asset class?
Yeah. Well, we haven't seen, it's interesting, we haven't seen subscriptions drop off with price increases, and I think we got a long way to go. And I think part of that is consumers are treating it almost like a utility bill or a staple. And unlike perhaps in video, where you might have 3 or 4 or 5 subscriptions, or maybe not even know because you need to go to Disney Plus or you need to go to Amazon Prime or Apple to get what you actually want to watch. Music, you can get all your content in one place, and as a result of that, we haven't yet seen any turn down because of economic conditions, and we don't think we will for quite a while. But there are some other risks. If you only owned a catalog or two from an artist or two, then you would certainly be subject to people not listening to that artist as much or falling out of favor in the marketplace. And that's why I think it's pretty important to build a portfolio of these assets so you're not subject to one or two of them falling out of favor by any means.
So based on that, when we build a portfolio, obviously it's a matter of putting together a collection of different investments that have different risk return characteristics, hopefully will behave differently under different economic environments. How do you think about building a portfolio of music assets, specifically things like age of music or genre or size of catalog? Can you address kind of your thinking, as a portfolio manager in that space?
Sure. We think about it the same way as you would with the entire portfolio, where you're picking your private credit manager or real estate manager along the way. Within this space, the one thing about music that's got a lot of interest in it is it's been a great diversifier. So people are still listening to music when the markets are up or down. People were listening to music when COVID hit. So it continues to act quite differently than other market conditions. So once we get into that, then to answer your question, we want to try and acquire catalogs where we've got some predictability in cash flow. It's very different than having a real estate asset where you can calculate the size of the building, recent rents. In this case, in theory, it's the entire world. So what we try and do is acquire a variety of different catalogs from different artists and different genres and different parts of the copyright, the songwriting or the recording of the sound. And then within that, we evaluate catalogs in a way we don't want to buy something that's too new. So out of the gate, an artist could be a great success. They release a new song, it gets a lot of fanfare and a lot of play, but then it'll fall off a radio chart, your top 40 chart or Billboard 200 and get less plays. So we're trying to find artists that have sort of found that level, that baseline of some stability over time. So the older the catalog is, generally the more predictable it is. Yeah, that's the way we evaluate those along the way.
Do you find that stability of play changes depending on the genre?
It certainly can. For example, country's a genre that's been growing a ton. Country has historically had a lot of radio play. And that's, we're a little bit more interested on the streaming side typically because it's easier to evaluate. But in that genre, you have to accept there's going to be more radio. Hip hop on the other side, radio can come and go pretty quickly. So we look at it a lot differently in terms of the composition of how this music is being listened to in terms of evaluating these catalogs as time goes on. The genres can definitely be different. And even you'll have niche genres like classical where they're on your Amazon dinner playlists and go to sleep playlist and study in the background playlist. That's great. It just reacts differently than a brand new hit song from Taylor Swift when it comes out.
What about the client, the age of the artist itself? So for example, what if you've got an artist that's still recording versus one maybe that's passed away like Gordon Lightfoot recently? Does that affect your decision making, whether or not they're still actively in their career and whether or not you want to purchase royalties from that artist?
If they're a younger artist and still in the growth in their career, yeah, we absolutely want to see activity, because what happens is if we see a collaboration with other artists, tours, new releases, all of those things, that helps expand their entire audience base, which helps the back catalogs. And we see artists who will sell their earlier works to enable them to help fund their later works, in addition to some of them are getting smart about diversifying their own asset base as well into other things beyond their career. With the older artists, the big, as you mentioned, the Dylans, the Springsteens, Gordon Lightfoot, where we do have some exposure, and rest in peace, Gordon, extremely talented Canadian, obviously. Those artists aren't necessarily as active, but they can still be touring a lot. So, but in terms of how you evaluate the portfolio, you kind of know what the audience is. And if anything, you're just getting a younger audience that's picking up on some of these artists along the way. Kind of like what we saw with Fleetwood Mac a couple of years ago, where it went viral because of a TikTok video. So yeah.
Well, Dave, that was very interesting. Really appreciate you stopping by today at Westmount and giving us a bit of perspective on why music royalties as an asset class is something that somebody might want to invest in. As always, alternative investments are not suitable for all investors, but if you're interested or want to find out more, please feel free to give us a call. We'll see you on the next Meet the Manager.
Great. Thank you.